Wir springen weiter in unser nächstes Thema und das folgende Panel dreht sich um den oft sehr, sehr steinigen Weg von der Pilotierung hin in den Regelbetrieb. Dieses Panel wird auf Englisch stattfinden unter dem Titel DLT in Financial Market From Pilots to Practice and Industry Perspectives. Unsere Moderatorin Dr. Carolin Hartmann ist Digital Consultant bei der Landesbank Baden-Württemberg, wird gleich durch das Panel führen. Und ich bitte, während Sie sich hier noch umsortieren, alle, die sitzen, alle, die zuschauen, schon mal um einen ganz, ganz herzlichen Applaus und herzlich willkommen auf der Bühne Dr. Carolin Hartmann.
Schön. Hello, everybody. We're just waiting for one panelist, and then we'll start.
Just start.
Yeah? Okay. Thank you, Christian. Yeah. So then, good afternoon, everyone, and welcome to our panel discussion, DLT in Financial Markets, from Pitch to Practice and Industry Perspective. DLT has moved far beyond experimentation, yet the path to a real-world adaptation is still evolving. Today we will explore what's working, what's missing, and what's next. I'm Carolin from LBBW's Digital Asset Innovation Team, and I'll be guiding you through this panel today. Let's get started and welcome our panelists. Please welcome Bernhard Schweizer, head of SAP's Digital Currency Hub. He's driving real-world blockchain integration in enterprise finance. And next to me, Roeland van der Stappen, head of EU policy at Coinbase, and a leading voice in crypto and digital finance regulation in Europe. And also welcome Christian Zimmermann, CEO and CLO at Greenfield Capital, investing in future of crypto and Web3 at institutional scale. Let's move to our first topic. We discussed a bit before the panel, and my question to you, panelists, is what's a DLT innovation or real-world application that stands out to you, and what were the success factors behind? Just jump in.
Wants to go first? Okay, so one innovation in financial markets. I think the first thing that comes to mind is recently everything that has happened as on the online chain, on the blockchain space, with decentralized exchanges, and in particular with perpetual futures. So if you just look back 2 years ago, there was no Hyperliquid. Now we have Hyperliquid as like the most dominant perpetual futures exchange on a DEX basis, so completely non-custodial, which is now transacting roughly around 350 billion a month. So 2.5 trillion in transaction volume in 2 years. If you look at what traditional financial equity markets have done and have achieved, who have been time to build up over a very long time horizon, this is really astonishing. Just one of the innovations that has happened. And with that, I give it over.
Yeah, one of the interesting innovations I saw in the last year was 21X, a new startup that basically brings trading and settlement into an atomic blockchain transaction. So you have instant payment versus delivery in an atomic blockchain transaction, which I think is fascinating. Now, what we still see more from an ERP level is we see the TradFi world. Every corporate is used to bank with traditional banks. We see the fascinating world of blockchain, what's happening there with decentralized protocols, with innovations just as the ones from 21X Finance. But we need to get it together. So we need to make sure that an enterprise system can talk to the more modern world. And this is probably the tiny innovation we can contribute.
Mm-hmm.
I would add like a couple of things that we clearly see stablecoins finding product market fit for cross-border payments, for corporate treasury, and so forth. We also now see big asset managers like BlackRock saying we want to tokenize everything. Nasdaqs of this world saying we want to trade tokenized securities. So there's also, I think, already some kind of agreement on like a future end state and a clear recognition that tokenization is just a superior way to transfer value. we are talking today about DLT in financial markets, but we also see DLT finding fit in the real economy. Just anecdotally, even though a lot of people come and build on Base for financial applications, think about the JP Morgans of this world, we also see European fashion companies using our blockchain, for example, to kind of run their digital product passports on this, because blockchain is very good for kind of supply chain traceability. And last but not least, we also see governments around the world experimenting with DLT, for example, putting land registers on it, or maybe other certifications. And we think that's very important to see governments move into this space, because if you have your identity and credentials on chain, these are foundational building blocks, and then the real economy will move. And even though there's merit in financial markets using blockchain to become more efficient, it's also a necessity, because it's where our customers will be. So we have to meet them on that new infrastructure.
Yeah, thank you. Also, Roeland, you mentioned important points, stable coins, but also regulation. Let's stay a bit with stable coins. We've seen a strong momentum in stable coins in the recent months. Where do you see the greatest potential for DLT adoption in the space?
I mean, coming from a corporate perspective, it's clearly payments. And Roland, you mentioned cross-border payments, and I think this is an industry that is ripe for disruption. If you look at cross-border payments today, it takes a couple of days to settle in traditional rails. It's costly. I was talking to a mid-sized enterprise that had a 500 euro invoice paying 50 euro banking fee, which is insane. And they lack transparency because they don't have native, as a mid-market company, access to the SWIFT network. With stablecoins and blockchain rails, instant, hardly any fee, and fully transparent.
If I could add, maybe for us, I agree with stablecoins, but also financial market infrastructure, the plumbing of financial markets, we think is ripe for, I would say, not only renovation, but reimagination. I think like we have historically kind of automated like our paper-based processes, and if we now kind of embrace public blockchains, we have an opportunity to bring everything on chain, be able to issue your stocks, equity on chain, trade them on chain, settle them on chain. I think this has immense opportunity to bring down costs for issuers and investors, and also have new business models where you can, for example, self-custody your own assets. You can maybe use your own stocks and borrow against them, things that were only available for the richer people. But so for us, it's very much the plumbing that will change, and with that will come new business models.
Stablecoins, so many applications. So everything has already been said on payments, and it's very true. It will completely change the market in remittances. It will completely change cross-border transactions if you want to clear shipping or anything like this. But let me point out some other use cases just to round out the picture. One thing is going to be the entire agent economy. So agents are transacting on-chain, which is going to be a huge part of the future economy, in particular in trading, but also if you want to book a hotel, that agent does that for you. That agent is not going to transact with traditional Visa payments, but they're going to use stablecoins for payment because this is the native on-chain currency. The next thing is, I also want to that this is an opportunity for consumers to actually develop something, because you don't have interest on stable coins, but you can stake your stable coins with Coinbase, with Binance or whatever it is, and you're going to generate yield on those stable coins. So for you as a consumer, this is going to be a much more attractive alternative to putting money into a traditional money market fund or even leaving it on your bank account, because the rates are much higher. And then the entire online ecosystem, that is everything that's DEX-based, that's trading pool-based, is going to be one of the pairs is going to be in stablecoins. And this is going to be a huge market as well. And I can go on and on and on, but just to give you some examples of where this is actually currently being used and which is going to explode in the future.
Yeah, so we see a lot of opportunities when it comes to stablecoins. And it was already mentioned, regulation plays an important and a huge role in this. So I'm wondering, when we look at MiCA, DLT pilot regime, digital identity, PSD3 in Europe, how do these regulation compare also to the regulation we see in Asia or in the US, and how does the difference in regulation, or what's the impact of these differences in regulation we see? Christian, I think
well,
you can start.
This is not going to be a hugely popular opinion, but with MiCA and stablecoins, we pretty much shot ourselves in the foot. MiCA is constructed on the stablecoin parts pretty much as a regulation to prohibit stablecoins, because everybody was so afraid of Libra and what Facebook and everybody else was going to do, that we restricted them in a way that make them pretty much unusable. In particular, how harsh the requirements are. And the other thing is, we completely did not see the chances that were in stablecoins. And this has been, in contrast, completely embraced by the rest of the world after the US switched. So the US, with the Genius Act, now has a comprehensive stablecoin framework that sets its own standards, and everything that is being done on-chain is transacted in US dollars or in USDT or USDC, whatever it is. It's the main currency because it's the main reserve currency of the world still. So if you want to transact on-chain, you're going to use that, and you're going to be the most dominant financial system and prop up your own financial system. This was really the chance for stablecoins for some national governments. And we missed it in Europe because we did MiCA. And now we're trying to go our own way and somehow find to have our own separated, isolated stablecoin regime that is going to work against the dominant US dollar regime. And this is not going to work. So we will have to find a solution out of this, because as it currently stands, we are completely on the wrong foot and the wrong path, in my opinion.
Probably I wouldn't be so critical towards MiCA. I think it's at least good that we have something. Other regions are missing it at all. And if I talk to corporates, without any regulation, no business. I wouldn't take a stable coin anyway in my balance sheet if I cannot have a solid regulation. So what worries me more is the kind of conflicting regulations, the interpretation that comes on top. So basically the conflict between PSD2 and MiCA. So you simply cannot move a payment with a stable coin without a respective PSD license, which I find a pity that we have two regulatory frameworks that do not really work well together. I think this is something which must not happen when we do regulation. I think we are fortunate that we do have regulation, and we need to get better. I mean, we are probably the first. You make mistakes if you're first. Yeah. You need to learn, and then you need to swiftly adapt and get better.
I have to say, I live and breathe all these issues in my day job, so it's like, where do I even start? But I agree with what has been said, is that, you know, MiCA has overregulated stablecoins a little bit, and also very much has approached it from a payment perspective. And obviously, stablecoins have use cases that have evolved, and regulation should reflect that. You ask an important question, like how does it compare to the US Genius Act? And you know, on many ways, on the principles, the regulation in the US and EU is pretty much the same: one-on-one reserves, transparent reserves, all of these things. But what is significantly different are the reserve assets for stablecoins in the EU. Because of the politics, we also introduce like a dependency on the bank, like 30 to 60% of stablecoins issued in the EU need to be held in bank deposits. So that creates a risk and dependency on the banking system, whereas in the US, for example, 100% can be in short-term government debt. At the same time, because of Trump, we often hear that the US regulation must be weaker than the EU. On this point, we would actually argue it's the other way around, because the US got it right from a potential perspective. Also heard in Brussels that we will have a MiCA review already next year, and MiCA 2 in 2027, so there will be opportunities to set the record straight. You also mentioned the DLT pilot regime. I think the EU was probably ahead of its time to think about how do we kind of test and build capital markets on DLT. Because we were ahead of our time, we were also maybe a bit too conservative, because thresholds are too low. Not all assets can be running in the pilot. And there I think we need to really be mindful in the EU that we are at risk to lose the race, whereas people talk in the EU about the Genius Act, which is a stablecoin piece of MiCA, Clarity, which is a rule for crypto as a service providers, what is also happening and what most people don't know is the so-called Project Crypto from the US Securities and Exchange Commission, which essentially will provide no action relief exemptions to companies like Coinbase to come with new models to the market, for example, on tokenized equity. This will already happen next year, whereas any revised DLT pilot regime will take 3-4 years to be implemented, and then might not even be ambitious enough. I always joke that whereas in the EU we play within a sandbox, and we are thinking about enlarging a sandbox over 3-4 years, the US is just going straight for the beach.
Yeah, I think this is an important point. We need to be bolder, I guess. Not only from a regulatory perspective, also from an adoption perspective. Mm-hmm. So we need to leave somehow the crypto bubble where we have great startups, great ideas. We need to bring that into mass adoption. Be that on the consumer side. I mean, there are also good use cases on the consumer side, but who really holds stable coins in his portfolio? Probably raise your hands. It's rather few, I would say. So much opportunities to drive adoption, put it on the positive side, and very much so also on the corporate side. Since 2 years, we have started that project. We are live now with kind of connecting stablecoin payment rails into a core ERP system. We get a lot of questions, but it's lots of education. Even some treasury departments do not understand what a stablecoin is in contrast to a deposit token, in contrast to a digital euro. And I mean, if we don't get the education right into the mass, we don't get the adoption. And that, for me, is probably the most critical thing.
So there is a lot of work to do still for regulators, but also on the education side. And thank you also for comparing it to the US. I think that's pretty helpful when we look at the adoption of stablecoins or DLT in Europe. So when we think of DLT and also the advantages of DLT, it offers, Christian said it in our call, is a speed, transparency, and efficiency. But as we discuss it today, adoption is still lagging behind. What else needs to happen that, from a technological point of view or politically or economically for DLT to fully flourish in financial markets or beyond? I think you already raised some points, but yeah. What do we
What is hindering adoption? I think this question is much different now than it was 2 or 3 years ago. 2 or 3 years ago, if we have to be honest, many of the systems were not built, of the infrastructure were not built, or they were not working fast enough. And this has changed now over the last couple of years, where in particular on the infrastructure side, we have made huge gains. So the next Jupyter update of Solana is going to be able to process way in excess. I think it's 1 million transactions per second. So in the end, they can process more than the entire financial system without any problems, right? That's on the speed side. You have Hyperliquid doing microsecond transactions. The other thing that has changed, the usability has improved greatly, because crypto always used to be really great technology, crappy UX, right? So this is improving now with consumer-facing apps, and particularly it's improving with chain abstraction, which you did not have a couple of years ago, because nobody on a consumer side wants to go and change from one change to another and bridge and all these kinds of things, which are really complicated. So if you can abstract that away from the technology side to the back end, it makes it much more user-friendly. So I think many of the systems have been built. What is now missing is that education part, is getting the knowledge, what has happened over the last couple of years, out into the broader ecosystem, into the broader public, to drive adoption, and also on the consumer side as well as on the enterprise side, because both have to catch up. You can see this huge interest from both sides to actually just hungry for knowledge how this stuff works and how they can implement it, because there are these cost savings, there are these time savings, and there are, the more stability that it brings to the system. So I think this is the phase we are getting into now, which is the phase of consumer adoption, institutional adoptions, for which we need, of course, the regulatory guardrails, but also the knowledge on the people side. And I think if we all can communicate that, and it's very hard, but it's doable, then I think we will have no problem with adoption going forward. But your opinion?
I agree with everything you said. I think many of the building blocks are there. For example, when we are thinking about coming to market with a new DeFi model for tokenized equity, the blockchain is there, the self-hosted wallets are there, the decentralized exchanges are there. For us, it's now putting the different pieces of the puzzle together and then making them meet the regulatory requirements. And to a large extent, sometimes the regulatory rulebook is not adapted yet to the blockchain role. So this is why DLT pilot regime is incredibly important, because MiCA essentially for us in a capital markets perspective only covers the stablecoin piece. We need to kind of make sure that custody requirements are adapted to DLT, that there is a recognition of the right for self-custody, that stablecoins can be used as settlement asset collateral, that you can use DeFi interfaces in capital markets, that smart contracts security is kind of assessed in a different way. But I would also say that it's not always regulation, but it also depends on supervisory attitude. And then a proof of point is also now the change in leadership in the US with the SEC. You now have pretty much every week that the SEC or the CFTC leadership come out with big speeches saying we're going to put capital markets on chain, allow for innovation. And at the same time, we haven't seen almost a single speech in the EU on that. So it also often is about having a vision and also interpreting existing law in a more innovative, forward way.
And to add, we also have to get the established players move on. Technically, all is there, but at least large corporates want to do business with established financial services players. They want to do business with their established banks. They do not always want to jump to the new fintechs, financial services providers, exchanges. So if my house bank basically provides a wallet, provides access to digital assets, to stable coins, then I think this topic can start flying, because it comes basically very much to a network effect. If it's hard to get the assets, I cannot use them. And just to give you one example, I think this is probably 1.5 years ago, we were working with a mid-market client. That client was very eager to get on-chain transactions. Now, the hard part was to purchase a stable coin. And they tried to onboard with very well-established crypto players. And basically, they failed. Why did they fail? It was probably due to regulation. I mean, the managing directors need to get KYC, but also the owners. And the owner said, get rid of that stuff. So if regulation is too heavy, it requires a too heavy lift, you cannot even start small, and then you cannot get off the ground. So we need probably a little bit more relaxed on regulation. So, and I'm not a legal guy. So if a managing director signs, I think that should be good enough. Probably it is not. So that is one. We need to get the network effect going. And we need, of course, the established players also offering digital assets, digital ledger technology to their clients, because then I do not need to onboard. I can get started in a very subtle manner.
Yeah, thank you for your insights. And I see that there's still potential on the market for DLT. So, but we've learned, and we had it or we discussed it already, that we've seen a lot of innovation in Germany, in the EU already, and here is also the fear that we miss something out, and so that we in the EU really have DLT on the market. I would ask you if you could now make one call to action, whether to policymakers or to financial institutions or to users. What would it be to accelerate DLT innovation and adoption in Germany and the EU?
One call.
Yeah, one.
Many things to do, but the most important thing if you want to drive innovation is to have an innovative environment. And as already said, we currently have the situation that we have the chairman of the SEC, Atkins, going out and saying, we're going to bring the entire financial system on chain. And we have, in contrast, 30 regulators in Europe who all do their own thing, interpret MiCA completely different, and because have the complete different attitude. They have the attitude that Gensler had in the previous administration, namely, how can we make this as safe, protected, sure that nothing happens, whatever it is. Let's make it super complicated and make it super regulated so that nothing could ever happen. The problem is, if you do that, you strive for innovation. You don't give projects a chance to even build and innovate. So we need clear rules and clear tone from the top from the regulators that they are going to provide that space. And MiCA had that idea. MiCA had the very idea that we are not going to regulate decentralized finance because we don't know how to do it yet. We're going to look into that a couple of years down the road, but we're not going to do it now. But what is happening right now is the exact opposite effect, namely that regulators are trying to come up with the most complicated, most comprehensive rules and regulations. The Danish authorities, for example, what is required to be considered decentralized finance. And if I go through that entire list that, for example, the Danish regulators proposed, there's not a single project out there who's going to fulfill all of these criteria. So in the end, nobody wants to take that chance. So if you don't have clear, easy criteria, like, for example, Clarity has 5 criteria for when is a project considered mature and it's not a security and is subject to certain exemptions, that's something projects can build towards, that's something can innovate towards, and they have clear rules what they follow. And that allows innovation. The same from Atkins, that there's going to be a no-action rule. And so this is what we need, in my opinion, as one point.
For me, it's pretty simple. Just do it and get started. Don't wait.
I would have like maybe 2 call for actions. I think the first one would be to fully embrace public permissionless blockchains. Too often we see the EU being quite critical and conservative of those. We still have a 12-15% risk weight under Basel applied to banks. Yes. Building on that is punitive and it should be more an operational risk approach, like you hit certain criteria, then you can build on it or not. Same for the GDPR. We have seen the European Data Protection Board coming out with guidelines saying that building on permissionless blockchain would not be GDPR compliant. All these things are a deterrent for companies to build on it. Also, I think today we're having this Franco-German Digital Sovereignty Summit. This is not only important to embrace public blockchains from a financial market perspective, but also from a Web3 perspective. And last but not least, I think we need a comprehensive stablecoin strategy as the EU. We focus too much on risks and fear for dollarization of financial markets. There's a clear opportunity to grow European euro stablecoins, and I would also say there's an opportunity for Germany here, even though Germany is often the most critical of stablecoins. Also difference between the EU and the US is that the EU doesn't have the equivalent of European short-term government debt. The reality is that the reserves will probably be German government debt. So I always think for Germany, there's also a way to kind of maybe refinance its debt in a more economical way by embracing stablecoins. That's just my own opinion.
Yeah. Thank you, Roeland, Bernhard, and Christian, for sharing your perspectives, and thank you also to the audience for joining us today. We've learned right now that the journey to DLT adoption continues, but there's a really good perspective. So thank you very much.
Thank you.
Yeah.